Let's take a look at Tesla. Tesla had a bad day, down about 5% on Friday. It's in an interesting spot because the market is quite weak and it looks like Tesla is slowing down. There was some headlines. There were some recall headlines. This was on Motley Fool, but it was on a bunch of websites. Something about 1.1 million Tesla vehicles are being recalled, having to do with the window roll down was the reason. But bad news for Tesla. And then the other thing I noticed when I was looking through FinViz, we're still seeing a lot of selling from shareholders in a lot of the mega caps, but definitely in Tesla, which does make sense. When we jump over to the financials, we'll take a look at that. But here's Tesla on the, let's do a 4-day. Has had a big run. We all know the story. Was down here, went up 20 times. It's now going sideways. The economy isn't doing as good. Can it keep going? Isn't that the big question? Let's add some pretty crayon lines. So I like to add Bollinger Bands and anything to visually let me know what the trend is doing. And on the 4-day or 5-day, it is slowing down. It's either a flat sideways trend to starting to go negative, which makes sense when you look at the valuation. There's a lot of hope priced in this. There's definitely a lot of hope. It's not oversold. It is selling, but it's not oversold. But let me show you this quick trend line here. We're in, all the highs are lower. That's the simplest way to put it. If it gets above that and maybe takes out 350, hey, maybe it will be in a different trend. There's a lot of crowd at 226, so that should hold as support. If not, we'll be taking a trip down to 138 because that's what the next level of support. If there's a bear case, and there might be one forming, you could argue that, hey, maybe we'll do an extension of where we have been, and we might take it just a measured move lower to 120. That's if we get a bear case. The bull case would be the same thing, but the other way, right? Maybe we see some test of the highs. That would be the easy way to do it, and then if not, we'll go a little bit higher. I can't predict the future, but what I can do is look at the valuation. Let's get rid of all this noise. So if we look at the metrics, price to sales right now, 12 times sales. At the bottom when Tesla was really cheap, price to sales was below 2, like 1 to 2 times sales, and they were having funding issues. Then it got expensive. Then it started to grow into the valuation. Okay, right now we're at 12 times sales. We're not dirt cheap, and we're not as expensive as it used to be. But it does look like it's going down. Cash flow, not as useful right now. They are growing into their multiple, and they will have to do that over time. Something between 30 and 50 times. 30 to 50 times is the growth rate. So that's getting priced in. 67 times cash flow. Free cash flow is positive, so they are self-funding. They're not going to have to borrow or dilute anytime soon. At least that's what that implies. Here's a fun one: earnings yield. If you're buying it right now, it would be the earnings to price. This is what earnings yield is It's 1%. A lot of the mega caps are around 3 to 4% right now. So if you're buying Tesla right now, you're just making a big bet that it keeps growing over the next decade. You're not doing it because of the earnings. There's no juicy dividend or anything like that. So this should become maybe juicier as it slows down in growth and the multiple is more realistic. But that doesn't mean the price has to come down. It can just stay sideways for a long time and it continue to sell cars and do well. PE 99. So, PE divided by 50, that's the rough and dirty way that I do it. It's expected to grow at 50%. I did this earlier, but if we look at their earnings, they grew earnings at 25% and sales at 2%. So you be the judge. That was last quarter. They grew at 25%. Quarter before that, they grew at 42%. See, so that would be okay. That would be in line for that multiple. Before that, 7. So we'll see. And then let's look at price to book, always fun. It was as high as 40 times their balance sheet. It was 2018, it was 6 times. So when it was super cheap, it was 6 times book value. When it was super expensive, it was 46 times. And we're somewhere in the middle. Still kind of high. So we'll see what happens. I would not want to buy it here. I would want to get a deal. I don't think this is a deal. I think this is a great company. If we get a recession and they knock it down, I would consider taking a shot at it. But I think it's rich, and the numbers say the same thing. Does everybody own it? Does everybody think good things will happen? Maybe. So be careful out there.